Hello and welcome to the webinar titled Business Continuity Beyond Keeping Lights On, jointly presented by Newgen Software, a global software vendor with products and solutions in the space of business process management, enterprise content management, and customer communication management, and us E&Y, one of the largest professional services firm in the world. I thank you all for the overwhelming response we have obtained for this webinar. I am Darpan and shall be your host and moderator for this webinar today. Today we have with us Mr. Sachin Seth, who is partner and digital fintech leader at E&Y, and Mr. Ritesh Varma, who is global head of consulting, Newgen Software. Sachin will discuss how banks globally are facing crisis in this current COVID-19 situation and how they need to keep innovating themselves to meet the new normal. And then Ritesh will talk about how low-code digital automation platform can address the immediate business needs and help banks with business continuity. At the end of this presentation, we'll be having a Q&A session. We request you to type your questions in the question window of your GoToMeeting anytime during the webinar, and I shall take them up at the end of the session with our experts. With that, I hand it over to you, Sachin.
Yes, hi. Hello, everyone. This is Sachin Seth here from Ernst & Young, and look forward to having an engaging conversation with you today on this webinar. So thanks for joining this webinar and sparing your time. In the current difficult situations, as all of us are facing different experiences in our geographies where we are, and I really hope that your family, your colleagues, your near and dear ones, everybody is safe, and they are trying to overcome this together and also manage the work and the business in parallel, which is obviously one of the key pillar for the economy of our countries. So with this, I will move a little bit further and into the presentation for the today. So based on the agenda what we have, and it's about an hour slot, 45 minutes, we would cover up basically the point of view from me and Ritesh, and then happy to have questions from your point of view side. So because we have audience here which is a bit diversified audience from across the Middle East region and Africa region as well, so I'm sure you will have slightly different challenges being faced. But in a nutshell, when I look at the overview of the challenges which are being faced by the banks and financial services institutions across the board because of COVID-19, and which is almost like 2 months at its peak at this moment. And so definitely one area is that most of the place the new customer acquisition is almost standstill because the physical touch points have completely, or I would say right now at this moment, because of social distancing, etc., it has become very minimal. Customers' ability to engage with you for the financial transactions have reduced significantly because many of the customers are facing significant challenges in terms of their own business operations or their personal income levels, etc. Paperwork is still required in many of the locations, countries where the STP or digital onboarding is still a bit not a norm. So there, people are afraid of contacting each other, touching any kind of currency or paper or any kind of basically dependency on the individuals. So that's definitely a key area, whether it's a lending or whether it's a CASA or account opening process or any kind of engagements with the banks. There are plenty of operational challenges. I'm sure last 2 months we have gone through unprecedented time wherein there is a workforce available, but then how to utilize that workforce, what can be remotely done by the workforce. Some places there is a workload is tremendous because people need to continue with the basic bare minimum operations to maintain the workload, but there are places wherein productivity is very low, and how people are basically able to engage with what they have, maybe their own mobiles, their own tablets, their own devices, connectivity, and how we are basically supposed to manage it together, because none of us had really planned for it. So obviously today's environment is not the most efficient and productive environment for anyone, and basically there are all different type of experiences banking industry is facing in different geographies based on the customer set they have and the kind of the operations they have. From process and people and technology perspective also, I think technology side also it has been a massive, I would say, realignment. So basically a lot of capacity has gone into the cloud to manage the remote connectivity part. basically to see that basic operations are in place and people are able to communicate with each other. But obviously, it also has pushed a lot on the digital adoption side, because a lot of customer engagements which were very low from digital perspective, they have significantly increased. So in some of the countries, especially in Southeast Asia or in India or even Middle East or other places, including Africa, when I talk to my contacts, I do hear that the digital payments have taken upswing in most of the places. Obviously, there should be money available for people to transact, but digital payments has become, people want to keep the distance from with each other, and that's where legacy systems are becoming a challenge, because a lot of systems are not integrated for this kind of environment, for a completely non-touch kind of environment. And definitely there is a need for things to look at and realign, maybe in a quick fix for the time being, and maybe in a longer term, how do we really look at that in future, right? Regulatory compliance, yes, there are areas wherein regulatory compliance has been a little bit flexible, and they have been able to basically give some kind of a support to the country operations of banking, etc. There are some norms which have been relaxed a little bit, but at the end of the day, there is a risk, which is an inherent risk in the business of banking. So naturally, for that part, regulators are very much monitoring the positions in terms of liquidity, in terms of non-performing assets. Certain countries have given moratoriums for three months for loans to be paid. Certain countries are working on the grants. So every country is trying to look at it in their own way. But I would say that banking still remains the center of gravity, because while food and groceries and basic staples are part of parcel of the life as a human being to survive, but banks remain a center of gravity for any kind of transactions people have to carry out to be able to even get food and groceries as well, right? Cyber is, again, so criminals never leave a chance to exploit the crisis what humans face. And I think the cyber is one of the key area. We have seen that there is a tremendous amount of challenges being faced by customers, because this is a time hackers are at their best, and they are trying to see that where are the gaps left in the realignment of the whole digital and transformation infrastructure. And wherever they get opportunity, they are making the best of it. And obviously, that's something which we need to be watch out for, right? So these are the 5 challenges which we see. Obviously, I'm sure they get broken down into different levels as we go, into specific countries, specific kind of operations, etc. No, but the silver lining is that there is a digital push which has happened. There is an adoption of technologies which will happen, and probably 2 to 3 years of fast tracking will happen. So what if you are expecting your customers to adopt your best digital platform maybe 2 years later, or if you are expecting your operations team to adopt to a complete seamless automated process without human touch maybe a year and a half later, probably the time is today. And because the reason is that there is no choice. So physical touch has become a bad word in today's context. And that's where the adoption is becoming. People are really thanking the technologies what they had in their backyard, whether it was any of the collaboration tools, whether it was any of the bots, it was any of the automated things and apps, APIs. So I think today it's the best time that people are utilizing them, and the productivity is at its best when these kind of tools are available and people are able to take it up to the scalable level. So with this, I will move to the next. Obviously, there are on the left-hand side, you see what in this crisis may lead to certain global slowdown, which is obviously being discussed at different levels. Economical activities decline, shutdown of businesses, which could be a big impact on the banks because of the kind of credit facilities you might have provided to them. Consumer self-isolation, so this will change certain kind of demand. And also the digital crime, which I mentioned. So these are some of the things which are obviously going, and they are going to be here. Even if we are, opening up is happening in terms of a little bit of movement of people in different countries. I think it's here to stay. So probably for next 12 to 18 months, still is going to be an impact of this, depending on how we are able to overcome these situations as we move forward, right? So with this, let me just go a little bit deeper to discuss that what exactly, when I mean the impact of this on different, levels in the organization and functions in the organizations, and where, all of us need to look at the ways of and means of managing the operations, at the same time streamlining the things so that we are able to utilize the current set of time and do the things which are basically relevant for the organizations and help us use the time as well as the resources. So if you look at from 8 C's of our banking resilience point of view, what we have come out with the thought process is that these are the 8 C's which are going to be relevant in the post-COVID scenario, and probably some of the organizations have already started working on it. It also is very important to note that this scenario will reset many of the things. So some of you who might have had organizations facing already some challenges of efficiency or market leadership or customer share or customer experience, today the opportunity is for you to leapfrog and come close to your next best competitor. At the same time, the people who have been leader in the business, they have a bit of negative impact because the things have been reset, and for them to retain their leadership in the market is also a challenge because customer preferences have changed, customer behavior has changed, and also the bigger the business you have, the bigger the risk you carry, right? So that's basically the kind of approach. So based on that, we have 8 parameters which we are advising the customers on. So one is capital resilience, basically. So conserve the capital, divestments, liquidity management, etc., which is obviously more from the business point of view of the banks. Customer resilience, obviously ability to retain customers, ability to provide the services in the times like this. There are many examples as simple as this, that some of the countries, including India, is providing PDF digital newspapers to the people as a campaign. So which means that they are able to keep touch with the customers on a daily basis. They provide every morning a newspaper which nobody is willing to buy as a physical paper today because of the social distancing and any product carrying infectious viruses. So basically, this is a kind of thing. People are providing various kind of entertainment programs. People are providing various kind of customer delight, customer experience services, integrating with e-commerce, helping them order things, helping them things get delivered. So anything which you can do for customer, whether it is tangible or intangible at this stage, it will become a very, very relevant point for you to have customer stickiness as you go forward in the, and be the long-term winner, right? Cost resilience, again, I think all of us are used to building the costs based on the last year's budget and the growth. I think in most of the countries that has been the agenda. I think last 2 months have taught us that we need to go back to zero-based budgeting. We may need to look at realignment of the initiatives. We may need to look at every component of the cost to see that whether during this time were we able to monetize the cost. If we were not able to monetize the cost what we spend, whether it makes sense to continue carrying that cost. So we need to reset that agenda of cost and see that what is beneficial and what basically is something which is at this moment looks like something which is not value added sort of investment. Core operations, as I mentioned, I mean digitization will not be pushed for anymore. I think it has become ingrained in the the DNA of the people because of this crisis. And automation has become really the need of the hour in every sense. Every small piece, what can be automated, can go a long way in helping the banks run their operations. Credit collections again is a big area, and I know that your business people or the business people on the call, I think the biggest worry banks have today is what about collections? What money has been lent, the line of credit has been given, whether it's a term loan, it's personal loan, it's a securitized loan against the asset, auto, mortgage. When we I've been talking to different countries, different set of banks and mortgage companies. I think so collections is all about, as you know, it's about intent to pay, ability to pay, and facility to pay. So intent to pay part, obviously, I'm sure all of you have taken care in the credit underwriting rules. You have already seen that how the customer credit worthiness is. Now the question comes is that whether the customer has the ability to pay or facility to pay. As far as ability to pay is concerned, definitely there is a challenge because most of the small and medium enterprises or even larger customers or even the individual customers are facing tremendous challenges on the financial part. Many of them have been laid off, many of them have salary cuts, many of them are daily wages earners or the traders or the small business people whose businesses, whether it's an airline or whether it's a travel or it's anything to do with healthcare, there's so much of impact happening across the board. I think you need to look at your whole underwriting policies, procedures, and your collection strategies. So coming back on ability to pay is questioned now, and the people may have to be looked at in a different way. But facility to pay is something which is we can control ourselves. And many of the countries I'm seeing very interesting initiatives are being launched wherein they are tying up with the small, the small grocery stores, food and vegetable delivery vendors, or the gas pumps, wherein customers can go and pay if they do not have a nearby branch, if they do not have a digital, payment. I mean, obviously, the digital payment collection is the best possible means in today's times. But if the customer's earnings have been in the cash and customer is not able to really pay in digital currency or digital payments, then obviously there are other means. There are fintech companies or startup companies helping various banks and institutions to basically look at integrate. And if you need any help on this, please reach out to me. Happy to help with you, because this is the area we are running many webinars and workshops to be able to automate things for customers. And we know that the economy will have a huge impact if the collections and the non-performing assets become a key challenge for the banks. Crime resilience, I just talked about it. I mean, everybody understands it. No need for me to really go into too much of detail of it. But definitely the protection also becomes a very big agenda at this moment, because we don't know what we are dealing with. We have customers who we have limited VPN connections. We have limited, devices which are endpoint supported. So what basically is going to be how we are going to have our vendors, service providers, our, feet on the street, our own employees, working in the secured environment, and how the definition of security is changed. How we basically can secure, because it's no longer a security within the access card of the organization, it's a security of data is floating around across the board. So how do we look at that? Obviously, cultural resilience, very big component. I think as a human, race, we have gone through a big learning across the board, across the world, and I think it has made everybody, humble in terms of saying that what we have achieved so far, there's a long way to go before we become, completely de-risked from any kind of such impacts. But in today's context, culturally, people have been, have had different kind of experiences. Many people are used to working in a, traveling 2 hours, work 4 hours in a day, work in a particular office space with the collaboration of people, or today working on a laptop for hours together in a remote environment, supporting people. Communication mechanism has changed. So all this is basically going to impact the culture in the future, how people are going to behave and how people are going to basically come back. I think the definition of home and office will change forever, and that's what is happening. There's a lot of impact, and definition of branch will also change. Connectivity, obviously, that's the infrastructure support, whether it's a connectivity for our servers, applications, or our cloud infrastructure. I think that's become another area. So in just a nutshell, I think I took some time to explain that, but I would say, for CIO, it's like a complete resetting of the digital and technology strategy, realigning target operating model, looking at basically how the productivity can be managed better. Also, there is a silver lining that today the staff is available from business to support the IT initiatives, which was not typically the case. Most of the time, you see the initiatives of IT fail because the business team is never having enough time to support. But today, I think you have sufficient time from business team, especially from the sales team and the frontline team. Utilize that time to accelerate some of the migrations, some of the upgradations, some of the digitizations which are required for building a more robust and resilient platforms. From operations perspective and how operations, I think the question is about how do I re-engineer, how do I digitize, how do I ensure that I'm de-risking, how I use artificial intelligence. So use of AI, ML, NLP, voice-based things, speech things, were more like a lot of gimmicks were there in the people used to think that it is just for me to attract a customer or just for me to showcase some digital POCs. But let me tell you, that's become a reality of life. Even some of the governments are working with chatbots, looking at how do they manage the whole logistics of COVID-19 testing. Or even providing a certain level of basic infrastructure. So everywhere artificial intelligence is working with the government to support. So bank is practically, I would say, it's going to be the need of the day-to-day thing. I'm sure CISO's work has obviously become much more tougher. BYD devices have become much more relevant. If something breaks down, working from home on a company laptop, you don't have a choice to go back and ask for a new one at this moment. SOC becomes very important, and everything has become practically something which is a new problem to handle, and how do we do that in going forward environment, right? So with this, I think in the interest of time, I'll move a little bit faster as I've already gone in detail of setting up the context. So what we are suggesting or what we are thinking is that the point of view of sustain, adapt, and thrive. I think sustain part is already there. I think it's done almost like 50 days, 60 days have been the peak of the COVID-19. Adapt part is, I think all of us are going through it in different parts and different phases, depending on the how governments are allowing us the banking operations or the financial services operations to be done. So automate quick wins, virtualize your services, establish digital platforms. If you don't have, in fact, many customers have asked me this question, that if I don't have digital platform, does it make sense to do it now? Will this be pandemic lasting for another 3 months? By the time I build my app and build my something digital platform, will that be really still relevant? Let me tell you, this is the best time to actually invest in digital platforms, because first of all, the need of digital is not going to go away. It's going to further increase. People, especially with the higher age groups, will not come back to the physical places like branches to engage. They will be very much worried about their health. And nowadays, building digital platforms are no longer an agenda of 3 months, 6 months, 9 months. Even you can launch something in 30 days, 40 days, 45 days, which we are working as a EY. We are working with many clients, and we are helping them launch very quick platforms using certain of the basic building blocks and ability to create the specific apps or platforms for them to be able to do the job between the two platforms, how to integrate between the how do you create an e-commerce along with the banking and things like that, right? So, and obviously leveraging the new technologies, right? Thrive, obviously, I think when we come back, hopefully soon, I think all of us need to look at what's the silver lining in the game. If we, like I said, if we are challenger, we need to become leader. If we are leader, we need to sustain our leadership. If we have spent enough money on technology, we need to monetize it. If we have not spent, we have to spend it in the right direction. So all these things we need to recalibrate and look at what is the customer experience we are going to deliver in the future, and how we are going to reset the whole organization. So I think I already talked about most of the things, but just one more slide in detail for each one of them. Distributed operations, remote working of employees, but see that how they are able to work securely, how they are motivated enough. There are a lot of people are even doing online parties. Bring your own drink. BYOD has become not only bring your own device, it's also become BYOD, bring your own drink, and have a drink, sit across the table with another colleague of yours, have a coffee or have a beer, whatever the time is, right? And adopt to new service channels. I think as I said, voice bots, chat bots have become much more effective because call centers are no longer available. With the luxury of call centers is not there as much as it used to be. Essential services needs to be running, functioning properly, and engage customers digitally. Have notifications, SMSs, Bitleys, all this means to basically give them communication so that they feel comfortable. They feel that they have access to the bank. So again, like in case of Adopt, I already talked about most of the things, but quick wins like digital onboarding, eKYCs, how can we quickly enable them using the APIs? How can we look to quickly onboard certain tools for customers to use digital payments, like a video tools, etc. Certain cases of automatic credit for collections, etc. Can we get a one-time standing instruction signed off? How do we collaborate with fintech players to use the products they've already built and not build ourselves? How we virtualize our services as much as possible and digitally use the assets. How we have basically, like I said, set up digital platform if required in a quick and fast manner, and basically look at new technologies, which is basically helping in everything, including cloud, and which has been a slow adoption, but it could be fast track. So in this from Thrive perspective, which I mentioned, just taking it a little bit forward and then handing it over to my friend and Ritesh. What we are looking for, where you can move in future, how you can thrive. Ecosystem partnerships are going to be the future. Boundaries of industries are falling. Convergence is happening. It has been happening for 3 to 5 years already, but now it's going to fall. Today, as I said, electronic delivery, electronic payments, electronic services, everything is going to merge seamlessly. And that is where the ecosystem will play a much larger role. In terms of, so the customer is not going to be only a bank customer. Customer will be a customer of 3 things, 4 things, and customer may be using them. It's already happening in some of the geographies very well, but I guess the adoption was the key issue, which I think will become a lot more. Analytics will become real. There are areas wherein digital sales, nudging of customers, salespeople, etc., was always seen as if something like a aspirational or something which is a trial. I think it's going to become much more realistic. Everybody has stopped receiving call center calls. I think the digital means are going to be a lot more engaging, using the gamifications, etc., compared to the calling somebody or meeting somebody. Create customer intimacy by offering them, empathize with them, relevant, personalized services to them, which make sense to them and help them improve their life in today's environment. That will go a long way in building your relationship with the customers than anything else. Innovate for growth, because the market is going to reset itself. So there are certain things which will come up in a big way, certain things may go down. So how do you capitalize on the things which are on a growth, and empower basically a customer-centric culture throughout your organization, which is basically having underlying layer of digital, and basically looking at complete contactless end-to-end work environment. Yeah. So with this, I would like to hand over to Ritesh, and at the end of the session, happy to have any questions, and provide my contacts can be available from Newgen team. If any questions are subsequently also, we will be happy to basically engage and discuss. So Ritesh, handing over to you, and we'll be there to support questions.
Thanks a lot, Sachin, for the enlightening presentation. And just taking the cue on from Sachin from where he left, and just elaborating on the points a bit more. I think over the next 15 minutes, we will try and cover the overall aspect of things and how they are working. So I hope my screen is clear and you can see my things. So before the COVID situation, I'm sure the banks were already facing challenges from multiple agencies. So they were being challenged for being displaced, diminished, and disintermediated, which basically means that there were challenges from startups which were coming up, so which were more digitally aligned. They were on mobile phones, they were on portals. The new business models were coming up. So concepts like digital wallets, concepts like RAROC, which is rate of return, rate of interest varied on the loan that you are kind of subscribing to, were all facing challenges. Also, concepts of being disintermediated, which basically means that banks were no longer required. They basically were talking about instant transfers and things like that. So while banks were struggling with all these concepts, along came COVID, and the new normal came into place, which basically means that the way that customers would behave in the new normal would altogether change. The lockdown would pose operational challenges. The social distancing would mean logistic challenges, health risks, which basically means that business continuity would be a challenge, and lack of customer servicing. So, new regulations would need to come through for addressing all these concepts and challenges. So, before, banks were much more personal oriented, which basically means that relationship managers played a very, very important and a critical role. You needed to open an account, walk up to a branch, fill up a piece of paper, and open your account. It no longer is the normal today. People are wary of going into a branch, leave aside handling paper. So that kind of poses altogether a new set of challenges. And I'm not sure whether the banks are ready for it or not ready for it, but it definitely is scary. Where people were too used to kind of working with paper, working with people, both of them are no longer available at various addresses that are being kind of shown to them. So, which basically means that crisis or not, we are in a war-like situation where the business must go on. So that's the bottom line. That ultimately we are in a war, we are in a crisis, which basically means that we have to address business. Let's address the elephants in the room, which means that there were already talks of neobanks which were there, banks which were natively digital. All of the business which was being done was on a mobile phone or a portal or things like that. So why can't all the banks be that ways? I think that's the need of the hour today. What was also a concept was a traditional banks and fintech war that kept on going. While the banks were too driven from the regulatory framework, The fintechs were driven from a technology framework. It's hard to say in today's times which would take precedence and which would kind of be victorious in the overall run. Would the regulations bend in order to kind of address the technology needs? Or the technology would bend in order to kind of take into consideration the regulatory needs is something that we'll all have to wait and watch. From an overall perspective, there is the third elephant in the room, which is the disruption from other industries. So we hear more often than not, as Sachin mentioned, ecosystems being developed in order to kind of have banking which is promoted by various other industries. So we have Google coming into uh, competition with the bank, Starbucks coming into them. We have concepts like eKYC coming in, digital signatures coming in, and automation at the end of the day. So if we look at it, all of these challenges are disrupting the way banks and fintechs were working. It basically becomes a bigger challenge when COVID kind of a situation comes in and everything changes in a matter of 2 months. As Brett King, the author of Banks 4.0, says, that it's all about the experience. And it's more evident in today's times. Either banks remove friction or someone else would. This is more evident in today's times as we keep ourselves locked in our houses and not able to move outside. So, business continuity and the topic beyond keeping the lights on doesn't only affect the customers, it affects everybody: the customers, the employees, the strategy, the technology, the operations, and the partners. All of them need to kind of work in tandem in order to kind of make things happen for each of the stakeholders. None of these can work in isolation. So, technology, if it's not for the employees and the customers or the partners, it doesn't have any play at all. If strategy doesn't allow for the current set of business models and is not digitally oriented in today's times, it again is irrelevant. So, looking at the bigger picture, as Sachin was also mentioning, we need to have something which is reinventing the overall circle of life, which basically means we need to first sustain, then adapt, and then thrive, which basically means we need to move a step back in order to kind of move forward. What does sustaining mean? It basically means that in an overall experience, we need to enable distributed operations in today's times. What it says is that we need to enable anytime, anywhere working in today's perspective in order to make things happen. All of this was very, very sudden. Everything came in just in a matter of 2 months, and we had to adapt ourselves for sustenance. So, case in point is a huge bank in United States which was working on a cloud with us. It was able to kind of revamp itself into work from home kind of environment just because everything was on a digital platform for them. The movement from uh, an in-premise to an off-premise was very, very simple because of the overall perspective of having it hosted on cloud, files being electronically available, and working with it. Once you've taken care of the initial shock, it's not just the banks, but other industries as well need to adapt, which basically means automate for quick wins. All the customer oriented processes being moved into an automated phase and an autopilot phase becomes much more important in today's times. What it means is that concepts like customer onboarding, which were traditionally oriented towards making people go to a branch, sign a physical document, have a chat and a coffee with the customer relationship manager, no longer kind of makes sense. It has to be moved into a digital format. Customer relationship processes like customer servicing also need to be moved into a digital format at the end of the day in today's times, because your call centers are empty. The people responding to them are no longer there. The case in point is that there were, in light of the COVID situation, many governments have launched various schemes. To name a few, the Paycheck Protection Plan in the US, the Coronavirus Business Interruption Loans in UK, in Australia, the SME guarantee schemes were all aimed towards SMEs who can quickly borrow funds and make their day to day life simple. In order to do so, they could not go to the branch, they could not kind of apply for a loan there. So everything had to be moved into an automated scenario. And this was promoted by Newgen through the portal and the backend workflow. In today's times, or in probably times to come, what we would notice is that we need to virtualize the services. What it basically means is that with call centers or virtual shared services, the physical brick and mortar shared services virtually not being there, we would need to kind of make ways in order to kind of follow social distancing and still be able to manage transactions with the workforce that's available. So concepts like AI, ML, and virtual shared service centers would go a long way. What it basically means is that virtual shared services would play a very, very critical role. So brick and mortar services, shared services, would be replaced by virtual shared services, which would mean that people can work out of anywhere, anytime, because of various pressures that will be coming in. The, the fourth point in adapting to the new normal would be establishing the digital platform. What we need to establish is to envision and then establish to the new digital. A commercial lending bank in the US was struggling with disjointed applications. The front end was sorted. However, the back end had to be kind of worked on the paper uh, and the loan processing for commercial loans in the back end in a manual way. We worked along with them in these times of need in order to envision a strategy and establish a smooth transition from manual to digital so that people can now process the loans without interrupting the business criticality. And that's where we came in handy and worked along with them. Finally, we need to leverage the new age technologies in order to adapt. A few years back, the concept of SMAC was really prevalent. What it basically meant was to adapt as per the new normal at that point of time, with social, mobility, analytics, and cloud being leveraged. We cannot imagine a business being run in today's times without these basic parameters. So SMAC becomes the new in thing with everything. A case in point is a major healthcare provider in the US worked along with us in order to digitize the automated platform through smart devices in operations and went paperless and branchless. This enabled the digital of anywhere, anytime access to healthcare services by members to become a reality and ensure the business continuity at any point of time. Finally, how do we leapfrog forward in order to thrive into what is available? So, what we say is you need to connect your enterprises. We need to work along with the various business owners to orchestrate, contextualize, and engage the overall process so that everything works in tandem. We might have come up with banks seeing automated or disjointed operations where people at the end of the day have a fancy front office or a fancy portal to take in the various requests that come their way, but it is disjointed at the back end as they are not organized at the back. In India, and also there are examples in the Middle East and African subcontinent where we have worked along with the banks in order to make this a reality, connect the front office or the front end, that is a portal, a walk-in customer, a mobile customer, agents, and other people, to the back end, through which they process the entire set of applications, be it loans, be it account opening, be it maybe things like account payables as well, at the end of the day, to take it to the end perspective. Finally, we are all here to transform experiences. What it means is that we need to transform the customer journey right at the point where he starts his interaction with the people, with the bank, to the point where he becomes an advocate for you. We need to judge his journey, the sentiment, the communication that goes out from there, and engage him. All this becomes much more relevant in today's times when your personal touch with the customer is no longer available. We need to then make sure that we are addressing each of these touch points in order to make his journey worthwhile with the bank. And that is where you would thrive to the next level. We'd have multiple case in points over here. One of the biggest is how we have worked along with the bank in Middle East in order to kind of handle his customer services through social, through chatbots and other experiences so that he doesn't feel left out and is able to take it to the next level. Finally, as we said in the earlier part of our presentation, Newgen's digital automation platform with low-code capability enables you to build applications across the spectrum and helps you to manage this new normal in the sustained, adaptive, and contextual manner to help you thrive in the new business normal. Thank you, and we'd like to kind of take up questions. The floor is open for me and Sachin to take up any questions that you might have. Thank you.
Thank you, Ritesh and Sachin, for your valuable insights. Now, our first question is for you, Sachin. That is, after the present situation, how is the BFS industry seeking the BCP process as a whole?
No, thank you. And can you also please highlight this question is from where so that I'm able to relate better to the organization also.
The question is from Middle East. I mean, is
Okay.
one of our audience from Middle East.
Okay, fair enough. Okay. So yes, so as BCP, I think as most of the organizations and the banks were probably the first one to activate that, because From BCP perspective, systems, people, processes, everything basically got activated a couple of weeks back as far as the managing the operations were concerned. Now, because the question is from Middle East, obviously the BCP is in context of relevance, is in context of what kind of lockdown or what kind of business or what kind of pandemic or what kind of level of complexity it has been called out. So if I just give you an example, like say some countries have called it at the level of the disaster, highest level of disaster, right? Whereas in some countries, again, depending on the gravity of the situation and the kind level of infected people or the social distancing norms available, obviously the banks have operated in a different way. So let's say, to give an example of let's say India, wherein the banks are still having the branches open with the 50% staff and less working hours. So, and naturally so from that perspective, they have to activate BCP in a way that they are able to still continue with the certain normal operations, but they also have almost like 90% staff working from home. So they need to look at that whether they are able to have all those processes which were from audit perspective, regulatory perspective, or from compliance perspective, they are able to follow those processes even in the environment which is basically remote environment, right? So I think it's cutting the answer short, basically, I think the definition of BCP will get realigned to this kind of pandemic. It is one of the unprecedented event. I mean, there has been world wars, there have been tsunamis, there have been all sorts of disasters in the world, and BCPs have been activated, or even the malware attacks and stuff like that. But I think this kind of pandemic, nobody has really thought through, or so I think the kind of BCP planning will be, as I said, the whole strategy of the business and the technology will undergo tremendous amount of change. In the same way, the business continuity planning also will undergo a lot of changes in terms of what can be done remotely, what cannot be remotely, and what will be basically. So I think this pandemic-based, BCP would be the new addition to the game, which unfortunately nobody could think of this scale yet.
All right. And another question is that what changes do you see in the regulatory framework?
Okay, so again, answering this question in a short manner, regulatory framework, if you look at it, this framework is around many areas. So there is a framework around liquidity management, monetary policy. It's around certain, NPA classification. It's around the accounting standards. It's around basically, various. It's around the outsourcing of services. It's around basically managing the certain set of branch operations. So again, regulatory is a big area to be addressed in banking, and like every country has its own regulator and own checks and balances to monitor the risk as well as the customer service levels. So I think definitely there is going to be a tremendous change. Today, when regulators are working remotely, they are not present in the office in many countries. So definitely I would say 3 or 4 things I see as a very clear differentiator. While I'm not expert on regulatory, but I would say this is based on my understanding of discussion with the people, I think 4 or 5 things will definitely can be anticipated. One is that all the regulators pushing for a lot more digital adoption and encouraging people to go for digital investments is one. Or maybe they may incentivize also. They may give. I think only some countries were allowing digital-only banks. Now I think every country would be open to have digital-only banks, neo-banks kind of platforms. That's one. Second part is that banking is not limited to the branch or ATM. I think regulators have understood very well. So anywhere banking could also be the concept. A banking could be in the retail store also. A banking could be anywhere where the person can go to meet their needs. That's the second change may come. Third part is that from the classification of non-performing assets and basically liquidity, etc. I think I'm sure, depending on the economic situation of every country, the regulators will come back and have the point of view. May not be a permanent point of view, but maybe a point of view on a quarter-by-quarter basis to see that how those are done. Outsourcing of services also, this was one of the key areas. Some of the regulators have always been vigilant on that. From data security perspective, etc. I think that will become a lot more, I would say, sharper as we move forward. So these are the 3 or 4 points I can see. Obviously, there's a list of 10 other I'm sure regulators are thinking about.
All right. The next question is for you, Ritesh. And that is, what difference have you observed on country basis in the customer related processes?
That's a very relevant question. I think whoever put it up has been facing challenges from a customer oriented discussion as well. So, what we are seeing is that business has to happen. As I said, we are in a warlike situation at the moment, so business has to happen. How the processes are changing is that concepts of onboarding, digital processing of uh, services, and digital uh, maybe digital plays a very very important role in today's times. People are seeing an influx of digital being kind of at the base of everything that they are kind of trying to address at the moment and getting business from there. However, they are still struggling from the regulatory framework. So while the intent of taking the processes to the digital mode is there and is more overwhelming, the regulatory framework to back it up is something that many countries are struggling with. We are seeing an increased level of interest from SME lending, onboarding, uh, digital outreach for data outreach, and things like that, which are playing a very, very critical role in today's times. Thank you.
Okay, so our next question is, any of you can answer. The question is, do you recommend a careful examination and eventual re-engineering of business processes prior to embarking on a BCP initiative?
For sure, I think there's, as we said from the Thrive perspective as well, both Sachin and myself mentioned that in order to kind of analyze where you are and where you'd like to be in the new normal, it will be nice to do a business re-engineering of things and take it to the next level. And this can be either on a rapid prototype kind of a model or a full-fledged study, depending on the size of operations of the bank. Sachin?
Yes, sorry, I was my line was not pretty good. Ritesh, can you just repeat the sentence? I can add on to that.
Yeah, so what I was saying, so I am sure from today's times, the organizations can evaluate where they are and where they would like to be in the future in today's times. So they can definitely look at a business process re-engineering, and this can be based either on a study or a rapid prototype, depending on the size and operations of the organization.
Absolutely, absolutely, absolutely. No, I heard the last word, but I could not read. Yeah, absolutely. So I think, yeah, I mean, as I said also in the beginning, that there will be recalibration of such initiatives. So one is the time to market will need to be reduced in most of the initiatives, which was obviously pretty elongated. Rapid prototyping is one concept which is helping people to see what they will get, and I think is important to see that we fail fast, but we quickly improve on that. So I think that's a key part. So yes, I mean, long drawn re-engineering part, nobody would have really time to do that now. People's patience have really run out. But I guess, yeah, rapid prototyping or looking at the initiatives to drive 30, 60, 90 days, 120 days kind of outputs are going to be more relevant in digital.
I think that one.
All right. So we are running out of time now. So we can take just one question. Can we take one more question, Sachin?
Yeah, please go ahead, one question, and then you can share the IDs for mine and Ritesh with the audience. We can write and we can respond that.
Yeah.
Right. Do that. So our last question is, what kind of radio application Newgen has to deploy on the low code automation platform, and what are the timelines that we're looking and would be required for this deployment?
That's for
So,
Ritesh.
Yeah, that's
okay.
it.
So we have multiple low code platforms which are available from a local regional perspective as well. like account opening or customer onboarding, retail and corporate lending, and we have things for customer servicing or enterprise service management. And most importantly, we from the new stimulus packages that are being announced by various governments as such, we are quickly developing those and deploying it from an overall perspective into the environments. And on a cloud perspective, we have all of these available as well, which are ready to deploy, and this can be made up and running within a few weeks, 1 or 1.5 weeks. They can be live up and running.
Okay. So thank you, Ritesh and Sachin, for your valuable insights, and thank you for your time. I thank the entire audience for your valuable time and their tremendous response. We shall be sending across the presentations and the transcript for all the questions to you. Goodbye and have a great day ahead. Thank you.
Thank you.